For starters, Russian gas will no longer make up the bulk of Europe's energy imports.
High gas prices have been a major driver of inflation across Europe. The knock-on effects of the war and sanctions against Moscow.
Well, obviously it's very alarming. We're facing very significant price increases for both households and industry in the coming months.
But it comes as fears of gas shortages, even blackouts, are growing in Germany.
In Italy, it's unsurprisingly become a key issue in the election.
Wholesale gas prices in the UK hit a record high, rising nearly 40%.
Members now talking about dropping sanctions against Russia because of the cost of living crisis. Russia insists much of the problem lies with Europe's decision not to take out long-term contracts, for which it's now paying the price.
The global financial and energy markets are witnessing significant turbulence as geopolitical tensions continue to escalate. On June 12th, the Bank of Russia announced the suspension of trading sessions involving the US dollar, euros, and other Western currencies in the foreign exchange, precious metals, and derivatives markets of the Moscow Stock Exchange. This decision comes in response to the latest round of US sanctions, which have, by the way, been expanded to include the Moscow Exchange and Russia's central securities depository. In this analysis, I examine the ramification of these sanctions on Russia's financial markets and the broader implications for global energy prices, particularly in Europe. My name is Dr. David Oualaalou, and you are watching the Geopolitics in Conflict show. Suspension of the currency trading in Russia. What does it all mean? Well, the suspension of trading in Western currencies by the Bank of Russia marks a significant escalation in the economic standoff between Russia and the West. The US Treasury Department's recent sanctions target key components of Russia's financial infrastructure, including 1. The Moscow Exchange, 2. The Central Security Depository. These institutions are critical to providing bank account services and liquidity market, making them central to functioning of Russia's financial markets. By halting trading in dollars, euros, and other Western currencies on the Moscow Stock Exchange, Russia aims to mitigate the impact of these sanctions and reduce its dependence on Western financial systems. While currency trading will continue in the over-the-counter markets known as OTC, this move signals Russia's strategic shift towards greater financial sovereignty and resilience against Western economic pressure. Then what are the implications for the Russian economy? Well, the suspension of trading in major Western currencies is likely to have several immediate and long-term effects on the Russian economy. In the short term, this decision may lead to increased volatility in the Russian financial markets, as investors and businesses adjust to a new trading dynamics. The reliance on the over-the-counter markets may also limit liquidity and increase transactions costs, potentially hindering economic activities that rely on foreign currency transactions. In the long term, Russia's strategy to de-dollarize its economy and reduce reliance on Western currencies could lead to a more resilient financial system. By promoting the use of alternative currencies and financial instruments, Russia may enhance its economic independence and reduce vulnerability to future sanctions. However, this transition will require significant adjustments and could face challenges, particularly in maintaining investors' confidence and ensuring adequate liquidity in the financial markets. Then comes the impact on the global energy prices. Well, the geopolitical tensions between Russia and the West, exacerbated by the sanctions, have broader implications for global energy markets. Europe, in particular, continues to grapple with high energy prices as it seeks alternatives to Russia's historic cheap energy supplies. The Energy Institute's recent statistical review of world energy highlights the struggles of the global energy system in the face of geopolitical crises. As Europe diversifies its energy sources, so we thought, to reduce dependence on the Russian oil and gas, it faces higher costs and supply chain disruptions. The shift to alternative energy sources such as liquefied natural gas or LNG from other regions involves logistical challenges and higher prices, which are passed on to consumers and businesses. This situation is further complicated by the ongoing energy transition and the push towards renewable energy, which requires substantial investments and infrastructure development. The broader geopolitical and economic ramifications, which includes the expanding US sanctions on Russia's response under the deepening geopolitical rift between Russia and the West. This economic confrontation has significant implications for global trade and investment patterns. Countries and businesses are increasingly navigating a complex landscape of sanctions and countermeasures which can disrupt global supply chains and economic activities. For Europe, the high energy prices and the shift away from Russian energy sources highlight the urgency of achieving energy security and independence. A wishful thinking, if I may add. The current geopolitical context underscores the importance of developing diversified and resilient energy systems that can withstand external shocks. This includes investing in renewable energy, enhancing energy efficiency, and building strategic reserves. This includes investing in 1. Renewable energy, 2. Enhancing energy efficiency, and 3. Building strategic reserves. The suspension of trading in dollars and euros on Moscow Stock Exchange in response to expanded US sanctions marks a critical juncture in the economic standoff between Russia and the West. The broader implications of these developments are felt in the global energy markets, particularly in Europe, which continues, by the way, to face high energy prices and supply chain disruptions. As geopolitical tensions persist, the importance of developing a resilient and diversified energy system becomes increasingly evident. The evolving economic and geopolitical landscape requires strategic responses and collaborative efforts to ensure stability and sustainability in the face of ongoing challenges. This leads me to talk about today's video sponsor, Hillcrest Energy Technologies. Stock ticker on the Canadian Stock Exchange is HEAT, H-E-A-T. On the TCQB, the stock ticker is HLRTF. But what is Hillcrest Energy Technologies? Well, it is first headquartered in Vancouver, British Columbia, in Canada. It is a clean tech innovation company. Hillcrest is developing high-value, high-performance control systems and electric power conversion devices for next-generation powertrains, charging applications, and grid-connected renewable energy generation and storage system. Let me just share with you a sample product. One of Hillcrest Technologies' product is the 1000 volt 350 kVA SiC traction inverter. That's their product. And what does it do? Well, first of all, the kVA stands for kilovolt amperes. It is basically the unit of apparent power and is the product of the RMS values of voltage and current. And I'll give you just an example. 1 kVA is the equivalency of 1000 volt amperes. So what does this product do? Well, the 1000 volt 350 kVA SiC traction inverter, it leverages the Hillcrest ZVS technology to solve many common challenges faced by today's conventional inverters. This converter, this product here, is unique. Why? Because it is lighter, more compact, and more efficient than conventional inverters on the market today. The Hillcrest ZVS traction inverter offers benefits across the entire powertrain. One thing is sure, Hillcrest technologies will have potential impact on electric mobility. But you need to know that behind this successful company is a professional management team that includes many talented and qualified personnel. I'm going to just share with you the top ranking officials in this company. The first one is Donald J. Curry. Donald Curry is the founding CEO of Hillcrest Energy Technologies. With over 30 years of experience in the energy sector, he established Hillcrest in February 2010. The objective was to create an organization that could blend his extensive financing expertise with entrepreneurial thinking. Known for his success in building trusted relationships and businesses, Don brings a wealth of knowledge from his decades-long exposure to North American equity markets and financing of public companies. Recognized as a straight shooter with a strong commitment to integrity and big-picture thinking, Don is at the forefront of Hillcrest's disruption of the clean technology sector. Under his leadership, Hillcrest pivoted into the clean tech sector, established as an expert team with deep-rooted networks in the automotive and energy sectors. At the same time, transformed an idea into commercially viable product in less than 3 years. Impressive, I say. Next is the Chief Technology Officer, Mr. Ari Berger. Mr. Berger is a distinguished expert in electric machine control technologies, system engineering, and multidisciplinary product design. He brings over a decade of commercial experience with a track record of deploying new technologies and go-to-market strategies, specifically in the sector of electrification. In 2015, Mr. Berger founded NIG System Ltd in Israel, which specializes in custom high-performance control system design. Prior to this, he previously worked for Bental Industries, a leading motor manufacturer. Mr. Berger holds a master's degree in system control engineering and is an expert in real-time embedded software development and dynamics. He has also published several academic papers and won several awards, including one from Intel for his innovative solutions for the water industry. Let me just share this with you. I am looking into this company because of the investment opportunities and the potential ROIs, return on investments, I see moving forward. What can I also share with you about Hillcrest Energy Technologies? Stock ticker on the Canadian Stock Exchange is HEAT, H-E-A-T. On OTCQB, the stock ticker is HLRTF. Is that it is one of my top commodity stock for this year. So, what are you waiting for? You can either invest in Hillcrest Energy Technologies today, or let this opportunity slip away as demand for energy converters is only going to grow moving forward. Once again, the Hillcrest Energy Technologies stock ticker is on the Canadian Stock Exchange is HEAT. OTCQB, the stock ticker is HLRTF, like you see on your screen. Check it out. But remember, there is always risk in investments and there are no guarantees. Thank you.